Welcome back to GrowthTV. I'm Carolyn Vallejo, and I'm here with Joe Mantone, who is lead author of the S&P Global Market Intelligence's quarterly white paper on global M&A and equity offerings. And he is also the host of the deal-making podcast, The Pipeline. So, Joe, there's quite a bit of turmoil going on in the banking sector right now. Can you talk a little bit about how that's impacting M&A overall?
Sure. Yeah, no, it is. There is quite a bit of turmoil. Really, I see the turmoil in the banking sector affecting M&A in two ways. One, volatility. We've seen 3 of the 4, I believe, largest bank failures in U.S. history in the last month and a half or so. And when that happens, of course, there's volatility in the market. And when there's volatility, it's just more difficult for buyers and sellers to agree on pricing. And so that's more of a near-term headwind to deal making. But longer term, something else that kind of impacts the market is the fact that there's all this pressure on banks right now. Some bank stocks are really facing a lot of pressure from investors right now. Their banks are going to contract lending, and as banks pull back on lending, that increases the likelihood of a recession, and it slows down economic growth. And then when there's that likelihood of a recession increasing, buyers are less likely to pursue M&A because nobody wants to do a deal and then see it go sour pretty quickly, or the valuation drop right after they do that. So those two ways, it adds volatility, and the banks pulling back on lending could increase the likelihood of a recession.
Mm-hmm. Right, so clearly it's a challenging environment right now, but deals are still getting done, luckily. So what are some of the sectors that you're seeing deal-making activity this year?
Yeah, I mean, the U.S. M&A market is a big one, so there's always deals happening. But quite honestly, I was looking at the numbers earlier today, and every sector from a term and number of deals is down in 2023 compared to 2022, and that's also off a low base because there was a pretty big drop off in 2022 from 2021 in M&A, and so it's a lower base, and we're seeing a fewer deals across sectors, all sectors. The one sector where we've seen an increase in total deal value is healthcare. There's been some large healthcare transactions, and we'll see some more big ticket deals in the healthcare space. There's the big pharma companies that they have a lot of cash, and they're always looking to replenish their pipelines for new drugs, and so they're definitely out there looking for deals. And those are the types of companies that are pursuing deals right now. Those that have good balance sheets and cash on hand, and they're looking ready to deploy it.
Right.
Yep.
So we're also hearing that deal makers have to get a little bit creative with deal structures and such. So what are the types of transactions that you're seeing and kind of expect to see in the near term? Yeah,
that's a good question. So, so what we've seen some carve outs. So bigger companies, carving out a portion of their business and selling it off. I mean, we've definitely seen the IPO markets receptive to those. Some of the biggest IPOs in recent quarters have been carve-outs of businesses that were part of bigger companies. And the reason for that is investors are interested in they're willing to back those companies because there's a proven track record of the company inside the conglomerate. The type of company that's not getting support is the tech company that has unbelievable user growth but no revenue. That's not a good time to go public if you're that sort of company. But carve-outs are happening. Private equity firms are, we're hearing a little bit of whispers that they're getting more involved in deals, but they're still pretty much on the sidelines. A couple of areas where we might see private equity get more active is in secondary deals, so deals between PE firms selling to another PE firms or investors. And so the first quarter of this year, we have some data on our site from Preqin and S&P Global Market Intelligence. The first quarter of this year, we saw the fundraising for secondary funds shoot up. It was like the best in about a decade. So that should lead to some more activity there. the credit contraction. We're also seeing private equity firms build up private credit funds. So they're kind of filling in the space where banks are pulling back. And those private credit funds can help fund the private equity take private deals. I mean, the stock market has come back a bit, but it's still pretty depressed. So, if you're a publicly traded company and you're not overwhelmed with your stock valuation, it's a good time to go private, and then sit back for 5 years and maybe try to sell again later down the road in a better environment. Those are some of the type of deals that we're seeing.
Got it. Yeah, so there's a lot going on, and I really appreciate you sharing your insights and bringing some clarity to this. And thank you so much for joining GrowthTV.
Yeah, no, thank you for having me.